Welcome back. You know that gut-wrenching feeling of a losing streak? Bleeding capital, feeling completely defeated? Well, before you throw your entire trading setup in the trash, hold on. Your broken strategy might not need the trash can. It might just need a systematic fix. Today, we're diving straight into exactly how to flip those red days into green ones.
First things first, is your strategy actually broken? Seriously, before you abandon your playbook out of sheer frustration, you've got to ask yourself, is the core idea fundamentally flawed? Or is the problem simply how and when you're executing it? Way too many traders hit a rough patch, completely panic, and burn the playbook when they were literally inches away from profitability.
Here's a painful but super important truth. A losing strategy doesn't always mean the core idea is useless. Sometimes your idea is actually spot on. The real issue might just be jumping the gun on an entry, a poorly placed stop loss, aiming for crazy, unrealistic targets, or just trading in the totally wrong market conditions. We've got to break down exactly why you're losing using hard data instead of just wildly guessing what went wrong.
There's a quote that hits the nail on the head here. The most dangerous thing in trading isn't a bad strategy, it's believing one works in all conditions. If someone tries to sell you a holy grail strategy that works everywhere, all the time, run. The market simply doesn't offer that kind of certainty. Think of your strategy like a map. You still have to deal with the actual road conditions, the volatility, the chop, the fakeouts. So to navigate all of that, we need a real process.
And that brings us right to step one, stop changing your rules randomly.
Seriously, you have to freeze your approach. I totally get how tempting it is to go in and tweak your indicators or completely mess with your position sizing after a brutal red day, but making random adjustments after every single loss, it makes your results mathematically impossible to trust. You end up trading total noise. You can't improve a system if you don't even know what it actually is. So you need to initiate what we call the rule freeze. Grab a pen right now and define your exact setup. Determine your precise entry point. Lock in a hard stop loss. Set a realistic profit target. Define the total risk you're allowed to take per trade. And finally, establish strict no-trade conditions. This locks everything down so we can actually measure your data accurately moving forward.
Once that's done, we move right along to step 2, review the trade data.
All right, so your rules are strictly locked in and you've executed a solid sample size, say giving the strategy at least 100 trades. Now it's time to aggressively hunt for patterns in those numbers. We aren't guessing anymore. We are letting the math reveal the absolute truth. You need to track metrics like your overall win rate, your maximum drawdown, and especially your risk-to-reward multiple, or R multiple. Let's put that into perspective. If you risk $300 and make $600, boom, that's a positive 2R gain. But what if you risk $300 and lose $600 because you just decided to ignore your stop loss? Ouch, that is a devastating negative 2R loss. Tracking this shows you instantly if your losses are contained or if they're completely spiraling out of control.
Now for step 3. We need to distinguish between strategy problems and execution problems.
This is a massive paradigm shift, and honestly, you have to look in the mirror for this one. Did you actually follow your own rules on those losing trades, or were you just clicking buttons out of pure emotion? Strategy problems mean the system loses consistently even when you follow the rules to the absolute letter. Execution problems, that means you're losing because you're chasing the market, moving your stops, sizing up way too big, or just panic entering trades. Imagine you enter a trade with a stop at $190, but when the price drops, you slide it down to $188 just to give it more room. You literally just doubled your risk. That's an execution problem, guys. The strategy itself isn't to blame there.
But what if your execution is actually flawless? Then we go to step 4, find the weakest part.
If you're genuinely executing perfectly but still bleeding money, we have to surgically isolate the specific variable that's dragging the whole system down. And remember, change only one variable at a time. Is it your entry timing? Like maybe you're consistently entering prematurely before getting real confirmation. Or maybe it's your stop loss. Is it way too tight for normal market volatility, getting you wicked out right before the stock rips to your target? Are your targets just totally unrealistic home runs? Or hey, maybe it's the time frame. Maybe this exact setup absolutely crushes it during the high-volume morning hours, but completely dies in the afternoon session. Isolate one variable and tweak it.
All right, on to step 5, remove low-quality trades. You'd be amazed how many losing strategies instantly become highly profitable just by filtering out the garbage market conditions that dilute your edge. A setup that prints money in a trending market might absolutely nuke your account in a choppy one, so systematically cut out the noise. Step 1. Identify and avoid those choppy, ranging markets if your setup relies heavily on momentum. Step 2. Filter out low-volume periods where the price action gets entirely unpredictable. And Step 3. Stop trading immediately after emotional losses so you don't start revenge trading past your daily limit. Remember, immense profitability often comes from taking far fewer but way better setups.
Which leads perfectly into Step 6, backtest the improved version.
After you make a rule change based on your data, you absolutely have to formally prove it works before you ever risk a single dollar of real money again. Taking new rules live with full size right away? Yeah, that's a one-way ticket to a blown-up account. When you backtest, you are looking for crystal clear data improvements. We want to see a higher profit factor, a significantly smaller maximum drawdown, an improved average risk-to-reward ratio, and just more consistent execution overall. Backtest the new version against your historical data and compare the metrics directly to your old system. If the improvement isn't overwhelmingly clear, you either keep testing or you reject the change entirely.
Now let's talk about how to optimize all of this using TradeZella.
I know exactly what you're thinking. Tracking R multiples, tagging execution errors, backtesting, it sounds like it'll take hours staring at a giant, boring spreadsheet. And honestly, it used to. But to do all of this efficiently, you need a system that tracks these exact metrics automatically, which is why TradeZella is such a game changer. It basically replaces emotional guesswork with cold, hard data. You get the Zella AI Auto Tagger, which categorizes your setups for you. It gives you super actionable session reviews, and my absolute favorite part, the tick-by-tick trade replay. It lets you visually replay your bad executions exactly as they happened, so you actually feel the uncertainty of the live market instead of just staring at a hindsight chart. Plus, it has over 10 years of historical backtesting data, so you can test those new rules instantly.
But as you do this, make sure you avoid the common traps. Don't go changing multiple rules at the exact same time, because then you won't have a clue which change actually worked. Don't ignore your own execution mistakes and unfairly point the finger at the strategy. And definitely don't judge a strategy from a tiny sample size of trades. Make sure you aren't falling for the classic trap of over-optimizing or holding on to a clearly broken setup just because it feels comfortable to your ego.
All of this brings us to this final verdict. A losing strategy can sometimes become profitable, but only if you analyze it honestly. If the data shows no edge, move on. Data is literally the ultimate antidote to emotion. Write down those non-negotiable rules, find your weak links, aggressively filter out the bad setups, and let the math dictate your very next move.
Stop gambling and start managing risk like a true professional. Click the link in the description to get 20% off TradeZella today and completely transform how you trade. Don't let your ego drain your account, let the data lead the way. So ask yourself right now, are you trading a proven system or are you just rolling the dice? Thanks for hanging out today, keep managing that risk, and I'll catch you in the next one.